Hello, and welcome to this week's episode of the Market Meter podcast. We're glad to have you on board, and we hope that you'll enjoy the discussion that the hosts will be engaged in today. So, our core focus for today's podcast is financial crime. Generally, it's a broad term, so to speak, but we're going to be focusing on issues related to investment fraud, because that's really what we discuss on this podcast. And also touch a bit on corruption, which has been an endemic issue within Kenya for years on end. So at this juncture, I think I'd just like to put one of the Fed chairs, who is well known, that's Alan Greenspan. And he once said that corruption, embezzlement, fraud, these are all characteristics which exist everywhere. It is regrettably the way human nature functions, whether we like it or not. What successful economies do is keep it to a minimum. No one has ever eliminated any of that stuff. So at this point, maybe I'll just ask the rest of the hosts to do brief introductions.
Yes, I think, first of all, this is a topic that, as Abraham has very astutely put it, it's an endemic issue. Your parents had it, you will have it in your lifetime, and your kids will definitely have it in their lifetimes. And also the thing about fraud or financial fraud in general is that it's constantly evolving. So even as regulation tries to catch up with certain methods, common methods of defrauding people or investors, there are always new innovative ways coming up, and they're very adaptable. So even on the regulation side, it's very essential that the regulators become very proactive in seeking out these kinds of crimes and stomping them out before we get massive losses suffered by members of the public. That's my opening thought on that. Maybe Rikard can also give us his 2 cents.
Hello everyone. Well, the topic today is rich, and I'd like to say that I'm excited to be part of this team where we can discuss about the financial injustices.
So just as I pointed out at the intro, we'll be talking about financial crime, and we'll look at the Kenyan context, but I think we'll also have to talk about that one famous crisis that every single lover of economics and finance needs to talk about, and that's the 2008 financial crisis, where we know what the banks kind of, so to speak, got away with. But we'll get into detail about that. So let's start from this point of investment fraud. And I think I would like us to first begin this discussion on the note of, yes, unregulated financial products. I think this is such a beautiful topic to delve into. And as much as it's beautiful, it's actually something ugly that corporations do and offer to the public. So of course, we know that financial products are regulated in Kenya by the Capital Markets Authority. And I believe one or the other, for the listeners on the show and even for the hosts, we've sort of gotten a chance to interact with these instances where such products have been offered to the public. So the latest, and which was really trending, and I believe most of you guys probably know about it, was the Saiton High Yield. Was it High Yield Solutions Fund or something of the sort?
Yes.
That had interest rates of close to 30%. I don't know what they're investing in. I don't know how they're gonna manage to bring back those kind of returns. But we can start the discussion from that note. Unregulated financial products, and with the Saiton High Yield Solution in focus, because this was a product that was offered to the public. There were those who invested money in it. I remember there was a lady on, was it Twitter, who said she put in about 2 million and expected returns. And all of a sudden, we are realizing that this thing is not even regulated. Even CMA doesn't know about it. So CMA had to take action after this thing has already been offered out there. And so many unsuspecting Kenyans fall prey to this kind of schemes. We can sort of also touch on Ponzi schemes and pyramid schemes. You know, those meetups in hotels where guys bring people who have sort of apparently gotten returns from investing in a certain product, and they come and they speak very well. By the way, I only had 100 bob. Now I have this amount of money, and I'm even going to buy a car. And they really know how to sell that message. We can also like get into that, but let's start just from that point of course, Cyton, because I think Cyton is a well-known investment company, and it's sad that such companies actually do offer these products to the public. So, Anto, what do you think about the same when it comes to unregulated financial products?
Yes. So I think to give a bit of context, there are two kinds of markets. There are public markets and there are private markets. Public markets are usually regulated. So you might find a company that wants to raise capital and they decide to issue shares in return for that capital through an IPO. Or you can find also similar company trying to raise money once again to fund the operations, issuing a corporate bond, which is just debt. So that's primarily what a public offer is. A public offer is this company agrees to terms set by the regulators, and one of them is actually disclosing your financial statements, and then having, I think for you to get listed, you must have at least 3 years of audited financial records, and then you be able to issue securities. If you have an IPO as a company, your stock is available to general public. It means that there's always the regulator is always there to check on the corporate governance, to check on different practices, to check on the financial reports of the companies, to ensure that they are keeping a certain level of there's a level of truth to their public disclosures, and ensuring basically that the interests of the investors are taken care of. And then on the flip side, private markets, first of all, are primarily unregulated, because if you involve yourself in maybe venture capital or private equity, when you're engaging that company that's willing to raise money, it's at your own risk. There's no intermediary. The Capital Markets Authority is not there to check, oh, this company has been doing this and this, or their reporting is wrong, or A, B, C, and D. So for unregulated markets or private markets, there's a greater degree of risk. So when you enter unregulated financial products, it doesn't mean all unregulated financial products are illegal or they're risky. They're higher risk than publicly available investment options or regulated financial products. But unregulated financial products, no matter how reputable the company, the risk is greater because there's no third party to look after your interests. As Abu has said about the Cyton High Yield Solutions Fund, it's very essential, first of all, when you're investing, to do your due diligence as an investor. And due diligence, the first step of due diligence, I believe, is understanding risk and reward. If someone is telling you they're going to offer you 20, 30, 40% return with little to minimal risk involved, that's a red flag. It's called a risk reward trade off. So if someone is giving you this unrealistic expectations of returns, it means that A, it's either they're scamming you, or B, that investment is really, really high risk. So that's the first thing you should always ask yourself as an investor when encountering such things. Because even the Cyton investors, if someone who understands that risk reward trade-off, he will smell it from a mile away. He'll be like, this one, it quacks like a duck. It moves like a duck. It's probably a duck.
It must be a duck, yeah.
It must be a duck. So as an investor, when you approach the first thing, as far as due diligence is concerned, just looking at the risk reward trade-off. And if that one metric of analysis can really save you from a lot of potential losses that you could encounter that maybe never recover from. And I think the CMA, how they've handled the whole issue, clearly shows a lack of understanding, or one might say a lack of experience in how to handle these things. Because if you Google the Cyton High Yield Solution Fund, and then you click on the news part, when you go to Google and then you Google and then you click on news, you will see articles as far back as 2018 of investors complaining about how illiquid the investment is. They can't get their money out. So if there is a particular investment product that people have been complaining about for years, and you only address it once it really enters the public domain, that shows a lack of initiative on the regulator side, and it's definitely something that needs to be checked up on. I don't know, Raikard, if how you're viewing the whole issue, because on my end it's completely absurd and could have easily been avoided.
So from my end, I'd like to say, when it comes to fraud, I'll say that unregulated markets, they're good and bad to the same degree. They're bad if you are at the losing end, whereby you don't understand the product that you're getting yourself into. So if you want to invest in a company like Acorns, you'd find it listed in the regular, you'd find it there, but it trades in the over-the-counter market, the OTC. So you might find, in a degree, it's somewhere behind the curtains. You can't fully understand what's going on unless you fully understand the business in terms of what is happening on the ground. You put yourself there in terms of understanding. But I can say that as investors, we need to be really realistic with where we put our money in terms of investments that we expect to gain, whether the market is regulated or not.
The one thing you've highlighted is very important. On the side of Cyton itself, they had an asset and liability mismatch. If you're investing in long-term assets, you can't promise people short-term cash flows. You can't invest in real estate, as Raikard said, and expect the cash flow to start in maybe 7-10 years. And you tell people we're going to pay you from the get-go, because that's disingenuous. You know, sooner or later there's going to be pressure. There are going to be people who want to relieve their funds for one reason or another, and you're going to be caught, holding the bag.
Basically, I think the main thing I can pick from all of this, and it's advice now we can give to the listeners: conduct due diligence. That's simple. We don't even need to look too much into it, because there's maybe a lot of hunger from young and old people alike to make money, and at times to make money quickly, which again is not quite easy, or it takes time to build. It's a very step-by-step process, unless of course you're born into wealth, so it's a bit easier for you to build it because you already have an existing foundation. So because of that hunger to probably be financially stable, that hunger to feel like I have investments and I'm able to have money for ventures and to have money to at least pay for the things that you want in life. Guys don't do their due diligence. As I'm saying, that example of that lady, you put in almost, and I suspect she put all her eggs in one basket and just dropped all her money there in the hope that she's going to get this quick return and she's going to be way richer than she was previously, or she's going to have much more than she already had. So the gist of it rather is conduct your due diligence as an investor. We've talked about unregulated financial products.
Mm-hmm.
So just on that note of investment fraud in financial markets, I would like us to just take a trip down history lane back to 2008 during the global financial crisis. And we have the banks and some of the securities they were offering to the public in the form of CDOs and what are known as the mortgage-backed securities or assets. Yeah. To our listeners, for those who watched The Big Short, for those who watched Margin Call, I think this is going to be a very interesting part of the podcast today, because essentially we had products being offered by leading institutions, not only like at the level of the US or in Europe, but globally, who offer these things. And guys who don't have jobs, or are owning like 3 houses on mortgages, guys whose wages could not support some of the houses that were under their name. So maybe you guys can also now shed more light on this issue of financial crime and how it connects to the economy, what it did, because a lot of guys feel like bankers got away with this thing, and then the Fed had to, of course, print money. I mean, people just feel like it was an entire joke. And out of all of this, actually, the most interesting thing is if you study the history of crypto when Bitcoin came out, Bitcoin coincided with a strong reaction to the government, because mistrust in how the government handles economics really grew. And that's where these movements, these libertarians just came out. There's a certain name, the cypherpunk community, I believe, because I've really studied the history of crypto, and they came out and they're like, we have to change the system of the world. We have to change how money is controlled. We can no longer leave it within just some boardroom decisions, where the chair of the Fed sits with a few guys and say, this is the interest rate for this month, based on statistics and based on what. So maybe you guys can get just a bit into that, and especially that context of the 2008 global recession. So Anto, give your thoughts.
I think you put it very well. The 2008 financial crisis, once again, as much as the banks were the main culprits, it was systemic. There were a lot of parties that were complicit in the whole thing. Because what will happen is, basically, normally, when you get a mortgage, the mortgage lender is the one that takes on the risk. So if it's a bank or just a housing financing company, they're the ones who take on the mortgage risk in case you default, in case you lose your job, or any of those things happen. But in 2008, just in the early 2000s, they figured out they will take all these consumer loans, and then they will pile them together and make these securities, creditized debt obligations, or CDOs. There are some that they will pile mortgage loans and auto loans and all these kinds of consumer loans, and they will create these financial securities. And then the same financial securities, they will sell them off. They will break them into units and they will sell them off to other investors. So that's what was happening. But before that even came along, what happened was they will take good debt and they'll pile it together with bad debt. So they'll take maybe a mortgage lender who's maybe a high performing lawyer in New York. Of course, the credit score is not the same as someone who's maybe defaulted 3 times in their lifetime, but they'll take good loans and bad loans and they'll just pile them together, create a security, and then they'll work in cahoots with all these credit ratings companies, and these companies will give very high ratings to this debt, because most of the investors are actually pension funds and all these collective investment schemes, and those schemes, they trust the word of these credit rating agencies to make the investment decisions. So you find a CDO and you're like, wait, this rating agency XYZ has given it AAA or BBB rating. You're like, this is good. This is investment grade, or it meets our investment criteria, and you put your money in there. And what you ended up finding is the market was so hot, everyone wanted a piece of the cake. You found even insurance companies coming up with like AIG coming up with credit default swaps. Basically, they are investment instruments that are set up in such a way that if that debt defaults, you are insured against the loss. So you'd find even a farm. You find now a farm, one of these banks that has issued these CDOs, they're taking out a credit default swap against the CDOs. It's almost as if you're betting against the security that you're the one who was issued. There was so much conflict of interest. Everyone was having a ball because people are making their commissions, people are making their money. And this is just one of the examples of things that happen when the regulators are not very proactive. The market is constantly changing. Whatever part of the markets you're not looking at yesterday, today, people might be somewhere making money in unscrupulous ways.
Rykard, any thoughts on this issue of investment fraud and its connection to economic?
So there's somebody who have borrowed from, to them, they'll call it in their books receivables. To me, it's a liability, to them, it's an asset. So if I default on paying this person, the person borrowed from, maybe they also borrow from somebody else so that they can foot my loan. Because, for example, that money is not theirs, for starters. So whatever they thought was an asset actually turns out to be a liability. So I find that these companies, even as people try to value companies in terms of trading and investments, you find that some things in their books, they look at them as assets, but they're really not assets. actually liabilities in terms of assets. So I'd also like to turn to investors and say that they should really look at what is intrinsic to a company, in that in case there are people around them fail, will the product be able to sell enough, whether on an up market or down market, so that it can be able to meet their liabilities as well as continue the operations and also of their debt. So you find that it's not really reliable in terms of what they're going to receive and all that, but in terms of what is the price of their product and what's the demand of it. So there's that aspect of the demand and supply of a product. That's where it actually comes in from, now coming from a theoretical point of view, now to more practical sense. We live in a world whereby people believe that you really need to go to school so you can understand these things, but actually you really need to just take a step back and look at things from a more holistic view and try to understand what actually works from point A to point B and what to point C, point A and B collapse.
I want us to just shift gears to something else, which sort of still relates to these issues of financial crime. You guys know a few years ago that there's a certain notable stock broker, or rather trader, who was involved in a deal related to Kenol Kobilia when Rubis was getting into the market. So it got the attention of the media, and he was slapped with a fine, and the issue was strongly linked with insider trading, yeah. And guys, of course, getting info on potential happenings within a company so that they know how to hedge their bets, so to speak, when it comes to trading on the stock market. So maybe I can pick your brains also as I contribute to this discussion on insider trading when it comes to financial crime. Anto?
Wow, that's a can of worms. You just handed me a hot potato. I'd say insider trading is when you're in possession of material and public information. When it comes to investment decisions you make, there's a method called scuttlebutt. You can do your own research as an analyst, and then you can come up with certain findings that are not necessarily in the public domain, but they are unique in the sense that not every market participant has them, and then you can be able to trade off of them. That is different from insider trading. And when the issue of Kobila, that was very clear that some people, maybe unscrupulous market participants, were able to take advantage of the information. But I think at the end of the day, people don't count on being found out, because you're doing it. You're like, it's just the four of us. Let's put on this trade. That's why I think regulation is not just about maybe the Capital Markets Authority or the CBK. Regulation also, there's an aspect of self-regulation where before you have to really be very keen on all your actions in the market and what has motivated them. And it's unscrupulous behaviors, because when it comes to markets, especially public markets, there are a lot of people's livelihoods dependent on that. And by livelihoods, I just don't mean like millionaires or billionaires who put their money in the stock market. I mean the average Kenyan, the farmer, the teacher. All these people do not know that they're exposed to the public markets, but they are. Because all these pensions that they have, what the pension schemes do is they pull all your funds, all your pension scheme contributions, and then they make investments in financial markets. It can be in bonds, it can be in stocks, dividend paying stocks, it can be in corporate debt, but not very common because of the greater risk involved in corporate debt. But public markets represent the livelihoods of a lot of people, and I think it's very essential as market participants that we keep that in mind when you're making our decisions.
Rikard, what do you gauge, or what do you get from all these issues related to insider trading? Would you actually sort of even justify it when you think about it?
Speaking from a more humane point of view, say if you give somebody this, if you give a capitalist it's a trading information, the best thing they'll do is they just profit from it
Mhm.
and nature. Whether we want to argue about it, whether it's good or bad, but if it falls onto your laps, it's just human nature that somebody will just go for it.
Yeah.
So
True. It's true. I mean, you can't deny, you can't shy away from such a chance. You know, it's like being
Mhm.
just getting Nini on a silver platter, a chance
Yeah.
to make a killing.
Yes, I think it's like someone sharing with you a fixed match, the outcome to a fixed match. They're telling you this team is going to win. They're going to throw the game. Of course, you'd bet on the other team to lose. As in, your bet will be influenced by that.
But
That's why
just a disclaimer to
Mhm.
the listeners: we don't support insider trading.
we don't
we're not-
support it. That's why
Yeah.
our first opinion was to advocate for self-regulation because we don't vouch for that. Yeah.
So I think just based on that, because now we've kind of captured two things related to financial crime and investment, and that's what's it called? Unregulated financial products. We haven't really touched on all of them, but that discussion kind of shed light that these things are out here and people are investing in them. In fact, I remember one of the days we had a WhatsApp call and we were talking about these circles and some of their land investments, building a greenhouse
Mhm.
and those kind of things. I think a lot of Kenyans will fall prey to that because Kenyans do understand the value of land and how it appreciates. So many of us fall victim to some of these schemes. And you put the money there, they tell you we're going to build a greenhouse in 6 months, we're going to build a greenhouse in 12 months, expect to start getting profits of between 300 and 500K every season, and then you pay, you don't even get the title deed, you get no documents regarding the land, but you've already given the deposit, which is probably in the hundreds of thousands or millions. So those are some of the issues Kenyans are kind of facing when it comes to investment. And then also now talking about insider trading, although insider trading might not be very well known amongst Kenyans, but for those who are familiar with the NSC, for those who are familiar with stock trading, they do understand that this happens. It happens a lot, and of course that's a financial crime. I think now maybe the last thing I'll touch on when it comes to investment fraud. We will discuss it at length, but at least just to get an idea of it before we move to corruption is now the issue on crypto. Because there are two diametrical opposing views about what crypto is, what its essence is. So is it a fraudulent investment scheme that one day will just bounce and guys who put their money there will just lose all of it? Or is it actually something genuine? Because, I mean, something like Bitcoin, Bitcoin has risen again over this weekend by the time of this podcast recording. And I think it's going now for $63,000, which means one Bitcoin is about 6.3 million Kenya shillings, 6.4 thereabout. But on the other hand, there's a scam. There've been scams rather of crypto. In fact, one of the biggest was called OneCoin, which the developer, the lady who started it, she disappeared with 4 billion worth, and people were told this is the future. So we're having these two very opposing views. I know even the CMA has warned Kenyans time and again. Guys don't even know this, but there are quite a number of Kenyan cryptocurrencies in the market.
Mhm.
There's Nurocoin. I don't know if they're still there, but from a few years ago, there are Nurocoin, Uwezo Coin, Kenny Coin. I don't know if there's anyone who has their own. It's a possibility. I don't know if any of you guys has their own cryptocurrency. Maybe you can tell us as you give your views. But that sort of struggle, and there are young people who believe that crypto is the way to go forward,
Mhm.
but there are also young people who believe it's not. Then there are also old people who share those same views. So it's probably one of the most hair splitting innovations, financial innovations of like the 21st century, because even its nature is very confusing. Is it a currency? Is it money? Is it just a security? I mean, is it a commodity? Because some jurisdictions consider it a commodity. It's just a digital asset. So at that note, should we invest in crypto? Is it fraudulent or is it not fraudulent? We can start with Balu.
I think cryptocurrency is the way to go. Earlier, I had my own views on saying cryptocurrency was a scam, but the way things are changing and the COVID became cryptocurrency now a good investment if people can invest in. People have made a lot of money in crypto.
I think Anto already has his doubts. I know Anto is.
Dude, I honestly don't have any doubts. I'm all for crypto. I'm actually the one who converted Rykard because Rykard was in the this is a scam kind of thing. Because there are those generation defining innovations, like that innovation that just goes like represents you coming of age. Because when crypto was starting, to enter the mainstream and getting zeitgeist, that's around the time you start becoming aware of the world around you and things like that. So our lifetimes for any young person right now, not just Bitcoin, but just blockchain technology defines our time. And I never wanted to be that old man who maybe I'm like 80 or 90, and then your kids are asking you about, oh, so crypto came out when you were a kid. What did you do about it? And you're like, well, I was not involved in that whole thing. So I never wanted to be that old man who missed out on the technology of his lifetime. And that's why I've been buying on my own little by little. And I think, as you said, the crypto space, the decentralized nature of blockchain technology means that regulation might be a bit of a headache. And of course, there are projects where the founders end up, scamming people. That's why I think when you're looking at something like crypto, maybe or unregulated markets, as we said, they're not all bad. You have to, another way you can really hedge is not have your eggs in one basket. Ensure that you're like, oh, I want crypto exposure. I want my money, putting your entire net worth in crypto, but you can have your stocks, you can have your fixed income, or you can have your SACCO, you can have a money market fund, but always ensure you don't centralize your money. You don't put your money in one basket, because even the most secure of investments have been known to go, to go tits up. So there's nothing that is assured to begin with, even regulated markets. But as far as maybe SACCOs and maybe crypto are concerned, also within those asset classes, ensure you're not exposed to one. You don't put all your money in XYZ coin. Wait, let me not assume, because there are very many coins. There's probably a coin called
XYZ.
So don't put, also within those asset classes, don't put your money in one. You can say, I'm having some Bitcoin, some Ethereum, some Solana. Solana's been kicking ass lately. You can have your money in all these different coins to be diversified, so that even if you have maybe one of them, you get scammed or something goes wrong, your gains are still very much protected, because the gains you've made on the likes of maybe Bitcoin and Ethereum have already hedged the losses that you got in that coin that you got scammed at. It's very essential to stay on your toes. And by the way, this topic of financial crime, we've just scratched the surface, because it even goes as far as predatory lending. All these micro loans you're seeing people getting,
Yeah.
let's not mention any company names, but all these micro loans, the interest rates are exorbitant. They're out of this world.
Yeah.
The lenders are making a killing out of it. And this is something, it might be a new phenomenon, like it has been just come to Kenya within the last decade. But somewhere like the US, there's something called payday loans. Basically, payday loans are loans that you tie to your paycheck. You're like, let me get this. I'm strapped for cash at this moment. Let me get a small loan, and then I'll be able to pay it when I get my paycheck. But you find that the lending terms, the fine print, you don't notice that. Everyone is just looking for that quick cash, that they forget the terms of the loan and the interest rates that these things are accruing. So you find people are they're neck deep in debt, up to the neck. You can't go a month without debt, because your salary, first of all, immediately gets here. You've already paid back a few loans, and now you can't survive on what's left. So you have to get more loans, to finance your lifestyle. And the thing about loans is the interest is always growing. So the more you refinance a loan, the more you get another loan to pay another loan, interest payments keep growing until a point where you find that your check just comes and it's gone, and you have nothing. You start from zero. So even as a person existing in the world, in this capitalist world, it's essential that you become very keen with the investments and the terms of the different investments you get in. If you don't understand something, seek the advice of a financial advisor. I know Kenyans don't like getting advice. We think we know everything, but that money of spent on an advisor will save you a lot of stress later in life. You can go around with a peace of mind.
Yeah, that's true. Actually, I like that you touched on these digital lenders. I don't think the law has been passed yet, but SPK is supposed to really bring them under regulation because these guys have been so predatory on Kenyans. I don't know. There was a certain report that was released, but there was one that had interest rates of up to 30%. And you can see Mshwari and KCB are offering 7.5%. And I'm thinking, where do these guys get the guts to actually offer such crazy interest rates? That's actually cruel to a certain degree, because you're not even helping probably grow these businesses. You're not helping these individuals finance themselves, whether it's for personal reasons or for business reasons. You're going to oppress them. You're going to cut them by the legs. So it's good you've touched on that, which of course now touches again on this issue of financial crime. And I think we've really hammered on that throughout the show, and we'll continue to talk about it even on Twitter. A lot of our engagements, we do just advise guys do your due diligence because it helps do research. I think we'll have a podcast recording just to really discuss what crypto is and to bring out an understanding of Bitcoin, why it came out, and how you can invest in it. Why some of us think it's the future, and also those who have doubts about its viability. I think we'll have an episode on that. But just from this discussion, I hope our listeners have gotten a bit of an idea of crypto, and that understanding that there are actually some crypto scams out here that we have to be careful about, because just as Anto has pointed out, crypto is inherently decentralized. So these guys can really take off with their cash. Like that they went away with 4 billion and is nowhere to be found. Those are guys who put cash there with expected return, so you have to be careful. But now you have a coin like Bitcoin, which of course many people, and Kenya is number 4 in terms of crypto adoption at the moment. I don't know if you saw that report. It was published by which company, but Kenya is number 4 in terms of crypto adoption. So there are many Kenyans who have invested in Bitcoin. And I know the places that are also accepting Bitcoin payments. Kwanza ni nakwanga huko Kiambu. Nasikia Kiambu guys have really tried to get that thing. So restaurants already accept Bitcoin payments for food and the likes. So now maybe we can now switch the conversation a bit. Of course, we're still in the context of financial crime, but this is one issue that we really need to talk about because it affects our politics and it affects our economics. And I know so many Kenyans have different takes on this. And that's why I started this podcast on the point of Alan Greenspan, that you cannot eliminate it. You can just keep it at a minimum. And the issue is corruption. So the Pandora paper leaks didn't really indicate that client 13173 has hidden embezzled funds or state resources within some of those bank accounts, but there are rumors that even the foundation of their wealth came from state resources. And again, this has been a constant thorn in the flesh for Kenyans. We feel like none of our politicians have really built their wealth from anything notable. I saw this lady on Citizen, I don't know who her name is, but she was talking about the fact that none of them have created anything innovative that has transformed the world. Okay, it's a good point, but it doesn't give the whole story. There are more ways to create wealth apart from being an entrepreneur. I mean, Warren Buffett, for example, is just an investor. But from that point of view, and this issue of corruption and financial crime, I would like to just pose the same question I posed when it came to the issue of the banks in 2008 and how that affected the economy and the global economy at large, and how corruption within Kenya especially is affecting the economy and it is affecting our politics. So, Anto, maybe you can just chip in on that note.
Yeah, I think the whole issue of corruption is an open secret. we have gotten to a point where everyone has surrendered to the opinion that most public officials are plundering the national, kitty on a consistent basis, and this is an open secret. Like, I'm certain most people who want to get into government in Kenya, it's not because they want to lead or they want to provide solutions. It's because they understand it's an avenue to wealth. You have access to the state coffers. It means you have unlimited wealth, and that's something we have almost accepted. Everyone is just, they've lifted their hands. They're like, this is the norm. My opinion of this, it might sound a bit nihilist, which is a contradiction, because I'm usually I try to be rational and optimistic at the same time. First of all, I'm also of the opinion that corruption is ever present around us, and not just at the very high levels of government. It's endemic even in our day-to-day interactions with the police, with each other, in government offices. And so this is not something that we can point at politicians and say, this is you. We're the ones who put them there. Someone is indicted on corruption charges, the next election we put them back in office. So at the end of the day, as much as this kind of conversation usually ends up demonizing politicians, I have no problem with the politician at all. The problem I have is with the Kenyans who keep voting for the same people once again. So it's upon us as Kenyans to look internally, to look inwards and say, we are tired of this and we'd like to see change. We'd like to see something different. You want accountability. And until we get to that point where we have opinions of how we want the government to be run, and we express those opinions through the ballot, nothing will ever change. We'll end up back having the same problems over and over again, talking about this every now and then. Even because you can't expect, when the people running the system or people leading the system are corrupt, you don't expect them to bring in any policies that are going to solve the same problem or the same issue they're guilty of. The Pandora Papers are a nice distraction, or the nice reminder that these things are going on. But if you approach the average Kenyan even before that leak, they will still tell you the same thing. They know our politicians are corrupt, or a majority of our politicians are corrupt, and they're okay with that. We have been beaten into submission that corruption is something normal, and it's something that we have ever present around us. So the change at the end of the day, we as Kenyans, lies among us. And as with the Panama Papers, the Pandora Papers have come and they have gone. Kenyans have a very short-term memory. We're like goldfish in a fish pool. I hit you, you go around. 5 seconds later, you come back. I hit you again, and then you come back again. It's essential that these things, as far as they keep happening and there's proof around us, the only way for any proper change to be made is, first of all, putting on the right officials in office so that they can implement this change. You can't expect people to self-regulate. The same people who are dirty, or they're complicit in all these practices that have created the cesspool that is most of our public service offices. It's essential that we put the right people in office, and we express that through our votes. So as Kenyans, this is an issue that you look inwardly. It's not about the politicians, it's about you.
I just want to add on what you've mentioned about corruption, and say that, one of the challenges I think Kenya has when it comes to dealing with corruption is the fact that, let's take Greenspan's view that corruption cannot be eliminated because it's human nature. The problem we have fundamentally in this country, and I want to speak from that point as a lawyer, is enforcement. How are we enforcing our laws against corruption? Because even when you go to these much more developed democracies, these criminals involved in corruption, these criminals involved in financial crime, these guys are locked up and they're made an example of. And people realize that this thing is dangerous, because essentially what they should be doing is deterring people from taking part in it. So we also have a system. Yes, there are guys who have been forward in Kenya for corruption matters, yeah, but not for the high level corruption issues that actually affect maybe the Kenyan taxpayer, that affect issues related to the public coffer. The cases seem to stall, the cases seem to disappear midway. As you're saying, Kenyans forget quickly, so even the media does not do proper follow-up of these stories. I remember there was a time the journalist Victoria Rubadiri just did a sort of, I don't know how long she did it for, but just revisiting all these scandals that Kenyans have forgotten, and we need to have that. I mean, even the journalists, and I hope the journalists who listen to this show, that we need to keep them accountable, because they're the ones who keep us informed about some of these things at times. So they should be able to go out there and really like tell us like, this is where this thing is, because it helps us understand this is where this case has reached. For me, it's just that issue of criminal enforcement. Of course, I'm not blaming the journalists. It's not really their role. But I really wish that we could get these guys involved in these crimes and really make an example of them, so that by the time someone is thinking of, the tender process, inflating it, by the time someone is thinking of creating so many shell companies in order to get some tenders and make money. I don't know if you've seen like this governor for Bigori, some of the charges. This guy had like so many companies, and he's taken so much money from the county government, SG consulting services, SG what, and it's just these two shell companies. Luckily, they've been discovered, but again, we don't know if this is a political move, because Obado is not he's not like sort of bent the knee to the kingpin in Nyanza. So if it's politically motivated, that's why they're pursuing him. But nonetheless, they're still pursuing him, which is good. So yeah, I think we need to just have strong enforcement mechanisms and actually have guilty people charged and put in jail for the financial crimes they've committed.
So it falls back to first of all the kind of people we put in office, as I mentioned earlier. Because if you put someone there who's upright or very stringent on these things, you can be sure there's going to be stricter enforcement. Because if there's no goodwill from the very top, believe me, none of these cases are going to be pursued or enforced. And we need good systems in place, first of all, because if you look at the example you gave, like somewhere in the US, regardless of who's in power at the White House, you can be sure that the SEC are going to do their part. You can be sure that different regulators are going to play their part, and they're going to punish all these different crimes. And we need, first of all, to get to a point where the system works by itself the way it is, independent of who is in power or who's at the very top of the mountain.
Yeah. Balu?
I was thinking, in Kenya, we are fighting corruption with corruption.
Such an interesting perspective.
You are fighting corruption with corruption. Someone gets in a big scandal, then all of a sudden he gets out.
So Mbalu, do you think we're inherently like a corrupt people? There's nothing that can be done, Ama? What's your thought on the way forward?
I think there's something that can be done. Maybe by electing good leaders, morals.
Yeah, agreement with him. Even in terms of that moral aspect, it's important, because these are issues of integrity and transparency and openness. Again, client 13173, he was expected to give a full account of his wealth, and he did not do that. It turns out he has offshore accounts. And again, I remember I told you guys when this matter just came out, so discussing it in the WhatsApp group, and I was like, I think he's just become the unfortunate victim. But there are many more Kenyan politicians who definitely have these offshore accounts, many more of them. So let's not be too quick to just demonize it, because the reality is there's a whole group of wealthy guys within Kenya who probably have the same practices, and probably they have even embezzled funds and put state resources within those offshore accounts to begin with.
I'm not an advocate for tyranny, but I think a leader who's very proactively seeking these things or these issues and solving them is the way forward. Because you might have all the goodwill you want, but at the end of the day, it's about boots on the ground. Someone putting pressure behind the people in charge to fight this monster.
Yeah,
and I think most politicians, once they get in power, they're very fearful, because all the the cronies who supported you to get in that office. If you come against them, they're going to take you out of that position. And that's why I think, I'm not of the opinion, but I think maybe someone like Uhuru's coming to the end of his term. He can easily decide that, I have no one to impress. I have no alliances to keep here. Let me give Kenyans a W for once, as in a politician giving us a W, and just go after all these people and ensure by the time he gets out of office, even if you just have 5-6 politicians who are behind bars for corruption, that will set a precedent going forward.
Yeah, so I think that really does it for the corruption issue. As I'm saying, it's also a well-known topic, and if you were to discuss it, it would take ages given different views. But it does have an impact on the economy, which is quite obvious, because if money is embezzled, okay, where's the money for development? Where's the money for building our infrastructure? Where's the money for our wages? So the effects are quite obvious, and we have already felt them as a country. It also creates mistrust from that social level, because people feel like they don't trust this government. I mean, every other time our president has left the country, people just think he's just going to take a loan and the money will be stolen. Like the loan actually would go for the purposes for which it was intended to begin with. So I don't think I can add anything unless any of the other hosts has something to say.
Yes, I think my parting shot is, when it comes to financial crime, in whatever form it might come, at the end of the day, it falls back to you as an individual to do your due diligence, ensure you're well informed, and we live in a capitalist society, so no matter what you do for a living, ensure you're very financially savvy so that you can be able to recognize some of these things. Ignorance is definitely not an excuse, especially when it comes to your finances, because your long-term well-being is highly determined by your financial situation. So ensure you put in time to educate yourself before you get involved with certain things going on around.
Balu, any parting shot?
I agree with Tony. I think when someone approaches you with let's make money quick, just go and do your own research, do your own diligence, and ask around.
Awesome. Thanks to all our listeners. As I said at the beginning, financial crime is quite a broad area, because there are also matters related to money laundering, financing of terrorism and the likes, but we wanted to just keep the context within investment, keep the context within the markets, the context within economics, and of course geopolitics. So at that juncture, just like to call it a day. You can follow us on social media at the Market Peter Podcast. Please interact with us. You can also feel free to give us any topics that you believe the hosts should discuss. So thanks once more for listening.